just wanted to make a little quick video about what I'm seeing on the markets end of the month. If you notice, I pulled up stockcharts.com, and just a quick note: I'm not a professional or anything, so I can't give legal investment advice, but it's just for educational purposes only. But so I got a monthly chart pulled up of the SPY, a mini ETF of the S&P 500, and you notice I have it on the elder bar system, color codes it, and it's showing a green buy signal for the monthly right now, but the PPO indicator is a oscillator indicator, momentum indicator. It's still showing negative on the histograms down here. If you notice, you haven't got the crossover of the black lines crossing the red yet. So if you get the histogram to go positive, I think it would be a really good sign that the market should keep going up. But according to Alexander Elder, Dr. Elder, he says this indication of the histograms when it starts back up is usually what he calls a springtime indicator. It's usually like planting seed in the spring. It's usually the beginning of a bull run, especially on a monthly or weekly basis. But like if you notice where it rolls over, starts back down, he calls that the fall. Like this would be the summertime when it's going up. And then when it rolls over, that would be the fall, heading into wintertime when it crosses negative below the zero line, and then it turns up, and that should be an indication of that it should go up. As you know, we had your red bars, which would be sell signals here and here back in 2015, 2016. And then when it went back to green, that would have been a pretty good buy signal, really, it looks like. I mean, it went pretty much straight up. Wish I would have known this 3 years ago, but I just learned this in his book probably last month or so. So I'm putting that to work. But for now, you're on a green buy signal on the S&P 500. So, if you're already in it, I guess you could probably stay in it. Or if you're not in it, I mean, I think it's a little overpriced right now. But I'd wait for some kind of a correction or pullback, maybe get it closer to this 11-month moving average. But if you look at the bonds, BMPX is the Vanguard Bonds. This is mostly for making this video for some co-workers that I work with for our 401k funds. So you notice we have a blue bar on the bonds, Vanguard total bonds, and that's like a neutral signal, which indicates you can either sell half or maybe stay on the sidelines if you're not already in it. Most likely you'll notice on these previous ones when it turns blue, sometimes it'll go red, go down for a while. Every one of these bars is a whole month of action. So if it pulls back, it could be a pretty significant drop. The PPO histogram, everything still looks positive on it. It could still keep going up, but according to Dr. Elder, when it gets above this, it's a 3 average true range of how far it moves in a month. Usually when it gets above that, like it has here lately, the last 3 or 4 months, it's due for a correction. But as far as how far it comes back, it can go as far as it wants to, as long as you have more buyers than sellers, it could keep going up. But for now, I would probably be on the sidelines, or at least sell half, take some profits if you're in it. But at least until it corrects and goes back green, and acts like it's going to keep going up. But if you look at it on a weekly basis, on the Vanguards, you had your pretty good correction the week of the 9th. Looks like this is on a weekly. All these bars would indicate a week of action. And so you had a pretty good down week, coming off of this, what they call a parabolic move, where it spikes a pretty steep incline. And of course, now you're back up near your top of your Keltner bands, kind of top of the range, so to speak. It can still bust out of it and go higher, but if you look at the histogram on the PPO indicator, it's negative, which would indicate weakness for now. And then you got your line crossover sell signal right there on a weekly basis, and it's still expanding. These two lines getting further apart indicates that it's getting weaker. So I was thinking about going back into it this week, but since I saw that, I probably won't till it flips back positive on the histogram, and then hopefully get a green bar. Like you see back over here in November, you had red and blue bars, and then you had your histogram went positive, and you had your green bar confirmation, and that would have been 1, 2, 3, 4, 5, 6, 6, 7 weeks of pretty steady up movement. But it's all a learning process. It's nothing works 100% of the time, but it's at least it's a good starting point, good indicator. But let's see, I was going to pull up the SPY on a weekly basis. It's got a neutral signal still from last week, and then this week still neutral. The PPO is still negative on it. Still haven't had your line crossover. It actually indicates kind of weakness when it acts like it's going to bust through and then it doesn't. But it is above the 0 line, so that's positive. But so I was also going to show you the Arthur Hill has a pretty cool indicator where he tracks all the sector ETFs. You have technology all the way through materials, real estate, and all of his indicators are up here on top. And then he breaks it down, and as long as everything's bullish, which should indicate everything's going up in the right direction, everything's green and positive. And then if he has anything flip negative, he'll show it in red, and he shows what date that it crosses over and flips red, and then he'll indicate with a negative percentage of how much the weighting of the whole S&P 500 sector. And so as long as this number is positive, the sum of the weighted signals, and it's at least above 50%, but plus 92% is a really good signal. So that's at least we have that. So that until that goes, I'd say at least below 50%. I'd hate to. If you're playing long term, that's a good indicator to go off of. You can find him on stockcharts.com. On the blogs, you can go to the top of the page. If you're not a member, I think you can just click on articles, and it'll bring up all the blogs, and then search for Arthur Hill. I think you can get his information for free. I'm not sure. He's working on getting a new subscription service going, I think, through him. But this is Julius de Kempenar's system on a RRG. He calls it relative rotation graph. It's kind of a big picture view of. I just put all the Vanguard funds that we have in our 401k that have a ticker symbol. I couldn't find all of them, but for the majority part of it. And then I used our, I think it's the 500 index fund. I used the SPY for that because it pretty much mirrors the same stocks, or most of the same stocks, same allocation or diversification, whatever you want to call it. And so this is a pretty basic. It just tells you, if it's improving, obviously it's getting a little better, a little stronger. If it's in the lagging sector, it's getting weak, weakening. as long as it's on the right side, it's decent, fairly strong. If it's up in this leading, that's where you really want it. If the arrow or indicator tail thing is going northeast, that's the best of the best, and the highest it is, and the further over to the right, that indicates the strongest. So right now, bonds appear to be outperforming the S&P 500. This is your benchmark S&P 500 or the SPX. So, and then your BWNX, which would be your let's see, what's that one? That's the Wellington Fund. It would probably be the next one, and then it goes to the BTWNX, and your target funds are starting to perk up as far as and the SPY is pretty flat. You can go over here and see the percentage change, and this is all on a 5-week basis. So that gives you a pretty good idea of what's strong and what's weak. If like the international stuff is not doing really well, and then the extended market, whatever that is, I'm not sure what all the stocks that are in that. I think you can go to like Morningstar.com and bring up the portfolio allocation or weighting or something. It'll bring up all the stocks that are in each individual one if you want to research that. But so for now, you have the bonds and the Wellington that looks about the strongest of everything we have, but you do have some target funds that are getting into the leading sector also, so that might help you a little bit if you want to try to diversify a little bit. I do know Warren Buffett told Tony Robbins in his book, he recommended, the book Money Mastering the Game that Tony Robbins wrote. He said he recommended for his kids, he told them to put 90% in the S&P 500 fund or something that mimicked or mirrored the S&P 500, which would be our 500 index or the SPY, and then put 10% in short-term government bonds. So for us, that's we have pretty much two selections for bonds. We either have the Vanguard Total bond or the Metropolitan. I did research the Metropolitan, and it did have, I think, it was over 14%, I think, 10, 11% of triple B bonds. And if you watch the movie The Big Short, you notice those went to zero, I believe, during the last recession. So I don't know that I'd recommend that Metropolitan very highly, but I was in it for a while, and when I saw that, I got out of it because I didn't want to be exposed to. If they do a repeat of that, that's not good. But so anyway, that's what I'm seeing so far. If it helps anybody, but hoping I didn't confuse you too much. But I guess we'll see what happens next month, and hopefully we can get that monthly indicator to go positive on this PPO histogram. And if we get that, get a green bar on the monthly, I think I'd be ready to go back to an all-in state, or at least do some kind of diversification, 50-50 or 60-40 or something. If you want to do the 90-10 like Warren Buffett says, you could try that. But I'm just kind of on defense right now because everything's pretty wishy-washy with the tariffs and the interest rate cuts, and so I'm just trying to limit the risk of any kind of downside exposure. There's all kind of talk about upcoming recessions. With you can Google yield curve inversion. I believe that happened August 15th, and there's historically 18 to 22 months after that happens, as usually when a recession starts. There's several professional economic advisors like Ray Dalio, Harry S. Dent Jr. They're predicting a recession might start in early 2020 to could be early summer. They're thinking maybe June, July. most likely 2020. So if anybody's going to be right, I would take Ray Dalio's advice because he's pretty sharp. I mean, there's been presidents, CEOs of companies, the Fed chairman. If they have a problem, they've called him in the past to try to help solve it. So he's highly respected on Wall Street. His opinion is pretty highly valued. So anyway, you can take this with a grain of salt, a shot of tequila. I guess it's nickel's worth of free advice. But like I said again, I'm not a pro. So I'm still learning. I've been doing this 7 years, so still kind of learning as I go. It's been a long, painful process, but I think I've got a PhD in that College of Hard Knocks. So, anyway, if any of y'all have any questions or comments, just post them below it, and I'll try to get back to you, or you can text me or call me if you have my number.